We've seen this all before, taking way too much risk, highlighting the apparent dangers in the system and the obvious fact that this cannot be sustained. There is no alternative to this. They need more yield, better returns, but bonds are practically worthless, so the mad scientists create products from garbage and attempt to call it modern art. Call it what you want, but either way, it stinks. You came here for the truth, so let me unveil that for you. Today I'm going to talk about something that is connected with one of the biggest issues I discuss on a regular basis. We're talking about the commercial mortgage-backed securities. When you see what's happening in real estate, in many places, it has risen to record levels. But you have to understand how beneath this system is derivatives, and it really has a problem maintaining its structure when you have just a small percentage that starts to fail, because all of these derivatives are essentially created from very little. It's like taking a grain of salt and somehow making an entire meal out of it. This is one very small thing that could become much larger. I'm going to get into the details of this specific example. I want to look at what's happening with real estate. I want to show you what's happening in the economy. There are many different topics that I need to discuss today. Stay until the end. It's going to be a packed one. Let's go. Cerberus is repackaging near junk CMBS, commercial mortgage-backed securities, into top-rated securities. This is so important. Just the title alone is all we need to see to give us those visions of 2007, 2008. Look at this. The firm has bundled BBB minus paper into AAA rated securities. Now you might think to yourself, you know what, this one company is bad. This one institution is the problem. No, as we found out in 2007 into 2008, they were all doing it. My goodness, they were all doing it. Now today, it's a little bit different because we're not doing the whole subprime thing as much as we were previously, but come on. The rot is there. The stink is there. Some investors consider $390 million transaction to be a CDO. What's happening here? The madness that they've created. You got to read the whole article. I will put the link in the description, but I want to cover a few points. Wall Street's alchemists are at it again, this time spinning supposedly safe investments out of the current market in commercial real estate. And I wanted to know something here, because you've got the commercial real estate side and you've got the residential side. And there is this very, very strange belief. You know, if you talk to the real estate agents, they don't know, and I get it. But look, these two things are not actually separate. One can impact the other, and they do so directly. And the link, the key between both of them is the derivatives, the big D. In a maneuver that recalls the complex home mortgage investments in the mid-2000s, Cerberus has used relatively low-quality commercial bonds to create AAA debt. Although the investments firm didn't invent these securities, it's selling them at a moment when the property market is being clobbered. Around 9% of commercial mortgages that have been bundled into bonds were delinquent in August. That's according to TREP. So we've got 9% of these already, and the problem has just begun. We've only just begun to see what has happened. Now, I have harped on a lot about this issue before. I know if you're a regular subscriber here, you've heard me talk about why this is an issue in general with the commercial mortgage-backed securities. I've gone into depth with that. There is more about this specific thing. If you want to read it, definitely check it out. This article has some good info. The ultra-rich are using giant home loans to access cheap credit. JP Morgan has issued a $42 million loan on a New York penthouse owned by a Russian billionaire's family. This gets into depth into what they're talking about here, but essentially it allows them to get into these markets, to get access to capital, to then be able to invest. They're using these, sell them to investors, take the money, buy stock stocks with it, for instance, buy real estate with it. Right now, the market doesn't make sense. There are many aspects of this market that are broken. The financial system is broken. And today we are witnessing these wacky things. I showed you how rare plants are starting to skyrocket. We've talked about this before. It's going up and up into absurd levels. When these type of things happen, you start to get these visions, you start to get these memories, and you think to yourself, are we talking about the subprime crisis? Are we talking about the tulip mania? Because that starts to really ring a bell. This article is talking about rent prices, and right now where we have these mega cities, they're talking about San Francisco and others, they have actually seen price depreciation. Expensive cities continued to decrease in rental prices last month, with yearly drops largely led by the 7 most expensive cities. Talking about San Francisco, New York, Boston, San Jose, Oakland, LA, and Washington, D.C. San Francisco leads the fall. The median one-bed price in San Francisco last month was $28.30. Now that is excessively expensive, but imagine that is a 20% decrease from a year ago. So the change year over year is quite significant because there haven't been so many people that needed to move into these places as we have watched the inventory rise. The same exact thing is happening with the commercial side, but to an even more exaggerated degree. So I'm watching all of the different aspects of the real estate market today, whether it is the residential, commercial, but also with the derivatives and how they connect. If you want to read more details, of course, check this out. But essentially what we're looking at on the short term here is that rents have fallen in these mega cities. Same information here. This is just CNBC covering it. San Francisco rents plunge, showing the strain from the current issues here in 2020. As many people have been suffering, they've been relying on the money from the government, and I thought this was interesting. It isn't the only case, by the way, we've seen it, but this is related to the U.S. Virgin Islands. Department of Labor acknowledges bounced checks, says affected persons should redeposit. So they went to go take their money to the bank. Here, gonna deposit it now, and it bounces. The government bounced the checks. Can you believe it? I mean, it's unbelievable what we are seeing on so many different levels. There are so many people today that have been unable to get the funds that they need, and yet Apple gets money. The Queen gets money. And you as an individual, if you get screwed over, there's no help for you. This is an article talking about Hawaii. The food basket is serving 80,000 people a month. You could see the lineups of the cars. This isn't just one day. This isn't just one moment in time. But of course, there are more people all the time that are using these services and relying on it. And as they're saying here, they can't keep up. They're getting donations from people, and that's the only way that they can actually be able to provide what they have been up until this point. That is frightening. That is shocking to me because, like I said, the Queen's getting a bailout, Apple's getting a bailout, and just about every other big company through the Federal Reserve, it's just completely upside down. Texas taxpayers face a $117 billion bill for orphaned oil wells. We've been told over and over again how we don't have much to worry about with oil because it will always be in demand, we'll always need it. This technology is so fantastic with the fracking, shale is the new thing, energy independence, and so on. Look what's happening. Look at the aftermath of what we've seen. How many of these are actually profitable at $40 a barrel oil? Few, if any. So what we have today is a big issue that has been reverberating all throughout this industry. I've talked about the details of it before, but just understand that there's so much more than meets the eye. I know that Jim Cramer and many of the Robinhood investors have got on to the cruise ships, pumping their money in, but there's another aspect of it. Check this out. Cruise ship dismantling booms in Turkey. Businesses booming at a sea dock in western Turkey where 5 hulking cruise ships are being dismantled for scrap metal sales. They said usually it would be more like the oil tankers and cargo ships, but now the cruise ships seem to have very little value. This, to me, is a telltale sign of what's happening in this industry. Regal Cinemas likely suspending operations at all US locations. This is the second largest US cinema chain, and they're weighing closing their doors again as high-profile movies vacate the calendar. James Bond just got pushed into next year. So many of these big budget films are simply pushing it forward. Hollywood is kind of at a standstill here, and that means a lot of jobs. I know people don't care about these celebrities that are making $10 million, $20 million, $30 million a movie, but think about all of the individuals that work directly inside of this industry or in the periphery. That's a big problem. Of course, they want their bailout, but it's not a real solution. I mean, the economy has been built off of this constant need to consume, but suddenly the consumption patterns have changed, and of course, as a result, everything has been upended. In line with that, AMC Entertainment to run out of liquidity in 6 months. This here, same thing, big problems for this industry. This is a huge company, and what are they going to do? They're going to get some more money after that 6 months, issue some bonds, they got to pay up on the debt, close down some of the locations that are not performing as well, lay off a whole bunch of people. What's going to happen in a year from now? Is that going to actually be sufficient? Who knows? This doesn't look good, that's for sure. This article out of Reuters is talking about bubbles. Space bubbles ease New York restaurant troubles. And I'll try to highlight it for you if you can't see on the screen here, but this is a bubble. And essentially people are eating, dining inside of these bubbles. And they were talking about the reason why I mentioned this article is not just because they have the bubbles, and we've seen this before in other places. Amsterdam, I think, had it before this. But essentially, they were talking about how fantastic it was and how the people that were actually staying in these loved it so much. How everybody was having a great time inside, and I get it, it's marketing and so on, but this is not something that can be sustained as you get into the colder weather, which is obviously coming very soon for a lot of cities. How many of these different bubbles can be set up in place at a restaurant? It depends how big the patio is and so on. Maybe they're going to get 4 of these, maybe they're going to get 6 of these, but ultimately it's not enough revenue to keep the business going. And then to finish the video off, this here is a robot server. The robot server, I don't know if it might be difficult to see on here, but essentially the food goes in here, and then this robot, autonomous robot, would be able to deliver that to your table. So you sit down, you don't have to see a human being. The food would be delivered to you by a nice robot. I guess that means no tip. Do you tip a robot? I'm not sure how that's going to work. Let me ask you, would you tip a robot? Alright, that's enough for this video. If you found it informative, hit that thumbs up button. When you do, you are supporting me. I want to thank you for that. All the support I get is fantastic. Really, truly, it's the only reason why I'm still doing this. It's amazing. All of you from all around the world, I've learned so much. I get so much from you in the comments. It's fantastic. Thank you. If you want to learn how to sell stuff online, if you're interested in e-commerce, now is the right time. The course I created is absolutely valid for 2020. It is absolutely up to date with all of the information, and you definitely want to check it out. It's free, theamazongps.com. This financial system is designed to be complex, it's designed to be convoluted, and you can get everything that you need to know in these 2 books. Check them out at the link in the description. If you want the audiobook instead, you can get that at themoneygps.com. Wait a second, don't go anywhere. Have you seen this video? It's got a lot of details. Definitely want to check it out. Click on it, and I'll see you there.